dollar's downtrend remains intact. The market continues to focus on the risk that financial institutions will have to write off a significant amount of exposure to subprime and related deals. The estimate is that there's another 50 to 100 billion to write off. The top 10 major financial institutions in the U.S. have already written off 30 billion. So that remains one of the key focuses of the market, and it will continue to be next week. The Federal Reserve continues to maintain a balanced view of the market, and actually the economic data has been relatively softer, but not pointing toward a recession or a really steep decline, but that's still a risk. The real risk, though, is that the financial market turbulence causes the Fed to tip its hand one more time and cut rates. We expect that to happen possibly in December, but certainly by Q1. At the same time, countries like the ECB, the Bank of England remain on hold. The ECB today was more neutral. It did not use the word accommodative, which suggests it thinks rates are closer to neutral. And it did not signal another hike. In fact, we're probably likely to stay at 4% for an extended period. Our view is that the ECB actually ends up cutting it toward the end of the first half of next year. But for the euro at the moment, that keeps it in an uptrend against the dollar. The Bank of England, we see a risk that they cut at the next meeting, but for the moment, with the dollar's downtrend, the negative dollar sentiment still intact, the Bank of England cut is not the key focus. It's really the U.S. dollar sell-off. So we look for further dollar downtrend, the euro heading toward 150 over the coming weeks.